Hello everyone, I welcome you once again to AA Accounting Tutorials. Today we are beginning a new series on accounting for hire purchases, that is hire purchases system. In this video, we will be looking at the basic concepts of hire purchases system and the journal entries as well. After that, then we try to take a practice question and try to solve to enhance our understanding. But before we do so, if you are new to this channel, I'll encourage you to subscribe to this channel, turn on the notification bell so that any moment I upload any new videos, you'll get notified on your devices. Thank you. So with the concept of hire purchases system, it is where credit purchases are made, okay? These credit purchases are made in such a way that the payments are made in installments, okay? For instance, if you want to buy any item, let's consider an asset. For instance, you want to buy maybe a car, maybe a furniture or any other machinery, and you want the payment to be done in installments, and this will be an agreement between the parties involved in the hire purchases contracts, okay? So in the hire purchases system or contracts, there are two basic parties involved, okay? So we have the hire purchaser and the hire vendor, okay? So these are the two parties in a hire purchases contract, okay? And this hire purchaser is the buyer, okay? Is the buyer of the item involved, okay? And the hire vendor is the seller of the item involved, okay? So this hire purchaser is the very person or entity that buys the item from the hire vendor under the hire purchases contract, okay? And this hire vendor, it is the very entity or person who sells the item or asset to the hire purchaser under the hire purchases system, okay? So let's assume that the hire purchaser is buying an asset from the hire vendor, and this asset is a car, okay? So this car will be an asset for the hire purchaser, okay? And this car will be an item of sales, okay? Will be an item of sales to the hire vendor, okay? After the agreement has been established between the hire purchaser and the hire vendor, the hire purchaser needs to make an initial deposit, okay? An initial deposit to the hire vendor, okay? After the initial deposit has been made, the hire purchaser will at that point in time get a possession of the asset, that is the car. The hire purchaser will immediately get a possession of the car, but will never get or will not get the ownership of the car, okay? At this point in time, the hire purchaser will only get an access to the car or the asset after all payment has been made, okay? And I told you in a hire purchases contract, the payment will be made in installments, okay? So payment will be made in installments, okay? Payment will be made in installments. So the agreement can be made in such a way that the payment will be made in 5 different years, okay? So we talk of, so we have the first year, second year, third year, fourth year, and the 5th year, okay? So this installment, it comprises of the principal amount plus the interest. But remember that the initial deposit that the hire purchaser will make to the hire vendor there is no interest because payment is made at the beginning of the hire purchase contract. Okay, and because the installment payment will be made after the agreement, there will be an interest component in it that will be paid plus the principal amount to the hire vendor on installment. Okay, it can be done in monthly basis or yearly basis. So after all the installments has been made, or after all installments payments has been made, then the the hire purchaser will get ownership of the assets. Okay, the hire purchaser will now get the ownership of the assets. Okay, so that is after the payment of all the installment basis. But in a situation where the hire purchaser fails to pay any of the installments, so let's say the fourth installment, the hire purchaser wasn't able to pay. Okay, at this point in time, the hire vendor will take possession of the assets. Okay, or the hire vendor will seize the item. Okay, so when the hire vendor seizes the item, there will be no refund of money to the hire purchaser. According to the law, it is assumed that those payments he has made, or those installment payments the hire purchaser has made to the hire vendor, it is for rental purposes, or it has been taken as rental. Okay, so basically these are the basic concepts of the hire purchases contract. Okay, so let's consider the journal entry of this hire purchases system. But before we do so, I would like to take you through some basic traditional golden rule of accounting, okay, to make you understand the journal entries very well. So with the traditional golden rule of accounting, I would like us to use 3 different classes of accounts to explain this concept. So we talk of types of accounts, then we talk of the golden rule. Okay, very good. So first of all, let's talk of real account. Real account. For real accounts, we debit what comes in, debit what comes in, then we credit what goes out. That is the rule regarding transactions relating to a real account. So you have to read on all these real accounts to on top of personal accounts. For personal account, that is you debit the receiver, then you credit the giver. Alright, so the third class of account I'd like to talk about is nominal account. Okay, so with nominal account, we debit all expenses and losses. Okay, then we credit all income and gains. So these are the golden rule of accounting. Okay, so if you understand this, it will help you to understand the journal entry of this hire purchases system. So when we talk of real accounts, it is an account that record transactions relating to assets, liabilities, and equity. That is capital. Okay, so all transactions relating to these 3 assets, liabilities, and capital, these rules that govern it. Okay, and for personal account, records transactions related to individuals or business organizations that has a direct relationship with the business or the entity. Okay, so all those transactions are governed by this rule. We debit the receiver and credit the giver. So with nominal accounts, it records transactions relating to all other expenses, okay, and revenues as well. So for the rule, we debit all expenses and losses, and we credit all incomes and gains. So this concept will help us to understand the journal entry for the hire purchases system. Okay, so now let's look at the journal entry of the hire purchases system. But I would like to use this table to explain this concept for you to understand very well. Is that okay? So with this, will represent the transactions or the item, and this will be in the book of the hire purchaser or the HP, that is the buyer, okay? And this will be in the book or in the perspective of the hire vendor or the HV. Is that okay? So when there is the cash cost price, okay, that is the cost of the assets. So with this hire purchases system, with the recording, we consider if the item is of high value, that is of asset in nature, or it is of small value. So if the asset is of high value, that is an asset in nature, such assets are treated differently or separately in the book of accounts. But for small items with low values, we combine them and make the treatment. So with this perspective, I'm considering the item to be an asset. Is that okay? So when there is the cost price of the asset is being involved in the hire purchases contracts or in the hire purchases agreements, in the perspective of the hire purchaser, the entry is that you'll be debiting the asset account and credit the hire vendor's account. That is when we are making entries in the perspective of the hire purchaser or in the book of the hire purchaser. Alright, so we debit. So this DR means debit, okay? So we debit the assets, okay? Debit asset account, then we credit the hire vendor. Hire vendor's account. Okay, so this is the double entry for, or the journal entry for the cost price of the assets being purchased on hire purchase system. Is that okay? So when we come to the book of the hire vendor, the entry is that we will debit the customer's account, the customer's account. The customer's account here, for the perspective of the hire vendor, it represents the hire purchaser, okay, because the hire vendor sells the item to the hire purchaser, okay. So we debit the hire purchaser with the cost price or the sales price of the item, then we credit the hire purchase sales account, okay. So we credit hire purchase sales account, because the item which is an asset that is being sold to the hire purchaser or hire purchase system will not be an asset for the hire vendor anymore. It will be an item of sales, okay. So we will credit the hire purchase sales account and debit the customer's account or the hire purchase or the hire purchaser's account. Is that clear? So that is the double entry for the cost price of the assets or the cost price of the item that is being sold to the hire purchaser. That is the double entry for it in the perspective of the hire vendor, and that of the hire purchaser. Is that clear? The next item I would like to talk about is when there is a deposit or installment basis. Okay, so two deposits or installment. The double entry is that we debit the hire vendor, that is in the book of the hire purchaser, we debit the hire vendor's account. Okay, then we credit the cash book or the bank account of the hire purchaser. Okay, so this is in the book of the hire purchaser. So for the perspective of the high vendor, or in the book of the high vendor, we debit the cash book or the bank account, then we credit the customer's account. This is an interest or deposit. Anytime the high purchaser make a deposit or installment, the high vendor will receive such an amount. So we debit its cash book and we credit the customer's account because it is the customer who is giving out this cash in the form of deposit and the installment as well. And this installment, it is the combination of the principal amount and that of the interest, and all will be in the form of cash. So we debit the cash account of the high vendor, then we credit the customer's account or the high purchaser's account in the book of the high vendor. Is that clear? So the next item I would like to talk about is high purchase interest. Okay, so talk of high or HP, okay, or HP interest. That is high purchase interest. Okay, anytime there is high purchases interest, what we do is that we debit the high purchase interest account, then we credit the high vendor's account. That is in the perspective of the high purchaser. Okay, we are debiting the high purchase interest because the high purchase is an expense. Okay, so it will be debited. Okay, and we are crediting the high vendor's account because the high vendor will receive the interest, okay, as an income. So we credit the high vendor's account. Is that clear? And in the book of the high vendor, we debit the customer's account, then we credit the high purchase interest received account. Okay, we are crediting the high purchase received account because an interest received is an income to the high vendor. So the high purchase interest received account will be credited. Take note that in the book of the high purchaser, okay, any balance on the high vendor's account represents the unpaid portion of the cash cost price of the asset. Okay, that is in the book of the high purchaser. Any balance on the high vendor's account, okay, it represents the unpaid portion of the cash cost price of the assets. On the other hand, in the book of the high vendor, take note that any balance on the customer's account, okay, it represents that part of the cash sales price of the assets that have not yet received. Okay, so the portion of the sales that is being made that are not yet received. Okay, that is at any point in time the balance on the customer's account in the book of the high vendor. Okay, and the fourth item I would like to talk about is depreciation. Okay, the fourth item I would like to talk about is depreciation. I told you when we consider the item of sales to be an asset, it will be an asset for the high purchaser and it will be an item of sales for the high vendor. So because it will be an asset for the high purchaser, there will surely be a depreciation because it is an asset. And we debit the depreciation account, okay, then we credit the asset account to reduce the asset value. And the depreciation is an expense, so we debit depreciation account. But in the book of the high vendor, because it is an item of sales, we will not treat depreciation. Is that clear? And also at the end of the period, okay, the depreciation charge and that of the interest, okay, the depreciation charge and the interest charge. Okay, it will be transferred to the income statement. So high purchase interest is an expense and it has a debit balance. Depreciation is an expense and it also has a debit balance. So we will credit depreciation account and credit high purchase interest account, okay, in the name of income statement. Okay, so we credit these two accounts and debit the income statement with the high purchase interest and the depreciation as well. And one thing I would like you to take note is that the balance on the high purchase sales account and that of the balance on the high purchase interest received account, it will be transferred to the credit side of the high purchase trading account, and the cost price of the asset will be debited to high purchase trading account in order to ascertain the gross profits on the sales. Is that okay? So basically, this is the journal entry for high purchase system. Okay, so in a subsequent video we will be taking a full practice question where we will account for high purchase transactions in a book of the high purchaser. Okay, so if you haven't still subscribed to this channel, you make sure you subscribe to this channel as well. Comment and share this video for others to also benefit. Until we meet for our practice question, it is bye for now.